Sorry, I'm a little bit late starting. I had a computer issue. So give me just a minute. Okay. Thomas, can you see the participants if you open it? Can you see if people are in the waiting room?
I can see the participants, but I can't tell if people are in the waiting room or not.
Okay. Um, I don't think anybody's in the waiting room right now.
I can keep an eye out.
Okay. Well, I'll kind of try to watch that. Last time people were in the waiting room and I didn't see it. Okay, let me share my screen. Today we're going to talk about fun stuff. We hope we're never in this situation, but usually people who get in this situation, there's some sort of life event that causes issues, and we want to know how to help them when they're coming out of this. So
Mhm.
it's a good thing to know. Today for credit, scan this QR code. You'll find um, this isn't, yeah, oh, you know what? I've got to change this QR code because my computer just shut down super fast and I couldn't save all the things that I changed, sadly. So give me a second to put the correct one in. Sorry about this, you guys. Computers are awesome until they're not. Okay, here is the correct QR code. Okay, Thomas, will you scan that and see if it works and goes to the right place?
Yeah,
Should work. Today's only an hour class, so I'm going to be giving th 4 keywords total instead of the 5. And you'll have to, I always recommend writing them down, or you can have that Google Sheet open and just entering them every time I get them. But you need to give me 3 out of the 4 to get credit for today's class.
it worked.
Okay, good. That's the right one. Okay, so that's the first one. I'll put that back up here again. Get a little bit later in the class, we'll come back up to that one. Okay. First of all, before we jump into the class, anybody tell me what's going on with rates right now? They're looking slightly better, slightly worse. Who follows rates? Unmute yourself, just be brave.
I heard today that they're slightly better.
Yeah, so they're just slightly better. When we talk about that, it's not like you can necessarily get, quarter point lower, but they're slightly pricing better, meaning you're paying a little bit less fees for the rate that you're choosing. So that's good news. We had inflation come in a little bit higher than expected yesterday, or was it this morning? I can't remember now. Let's see, let me open up the guy I follow so I'm giving you correct information. Okay, so a little bit better today. PCE inflation data this morning came in a little bit higher than the forecast, but it didn't really cause too much reactions. Next week, we'll have the jobs data come in. So that's the next thing we're looking at affecting rates. But we're getting a little bit better outlook. Now, why do I always bring up rates in all my classes? Anybody know? There's kind of two reasons why I always do. Okay, one, it's good to know what's going on with rates for you as real estate agents, for especially for us as lenders, okay? Kind of know what they're doing. But do you need to know a specific rate to tell somebody? In my mind, I don't think you do, right? We know kind of where rates are. Everybody knows they're a little bit higher than they were during COVID. Everybody's worried about rates. But if you're hyper focused on the negative parts of this industry, that's just going to bring you down, right? So rates are what they are. We can't really change them, but people are still buying houses. And, the last 3 or 4 months have been some of my busier months in the last year. So try to stay positive and help your clients realize that no matter when they jump in the market, when they can is a good time. The only better time was yesterday. So try to have that mindset, and I think it will help you.
A lot of people actually should be looking to buy now, even if rates are what they claim to be higher, because the fundamentals predict for the future that they're actually going to be even higher. So this might even be a great buying opportunity now, and then weather the storm without a lot of competition as far as, no due diligence or earnest money going hard immediately. And then in the near future, rates will come down eventually and then refinance. So
Exactly. And they've got some other hard things right now, right? Their families who bought 20 years ago, what are they thinking? You're crazy to pay that much for a house, or like I couldn't handle that payment or whatever, right? So some people right now are buying a condo and their payment's about what their parents for their big house is, right? And that's hard to swallow sometimes, but it just is what it is. And it's always been that way, right? So people who bought 20 years ago had lots of equity and a lower payment, and we got to jump in at some point. The saddest thing to me is when people are retired and they're getting priced out of the rental market.
well, also too, there were far less people. There was far more land. I mean, rural areas are going to be cleaning out a massive exodus now that resources aren't flowing into them. So people will have no other choice but to like move towards cities and all the suburbs surrounding them. So really, I mean, again, just a buy opportunity now that it's only going to get more expensive in the future.
I agree. I agree. So make sure you kind of understand that so that you can talk to your buyers about that and help them understand. Now, we're not trying to pressure them into buying when they're not ready or they can't afford it or those kind of things, right? The idea being that when you can afford it, now is a good time to buy. Now is always a good time to buy. Okay, we're going to talk a little bit about the past because our class is on short sales, foreclosures, things like that. And we had a pretty big dip in our market in 2008. If you guys were in the market then and weathered the storm, that's pretty impressive, right? If you can work in that kind of market, you can work in any market. So, we had some things going on, but we're going to talk a little bit about that. So a short sale, who wants to tell me what a short sale is? Were you in the market in 2008? What happened?
Tragically, I don't know, I wrote up my first real estate purchase contract on the Nina Pinter Santa Maria. So I was in the market in 2008. There should be a few other people chiming in here, not just me. Short sales, what is a short sale? You owe more on your mortgage than your house is worth. So you need to or get to go to the bank and say, hey, my option is a foreclosure and walk away from the house, or I need you to work with me and reduce what's owed to you because I'm going to pay you short of what is owed. And that's why they call it a short sale.
That's great. Yeah. So why would somebody want to do that, right? Why would you need to do that? If you're in your house and can make your payment, would you need to short sell the house?
So that happened to me actually. I was in the military at the time, and I owned a home. I was actually in Las Vegas. I was stationed at Nellis, and in the military, you just have to go when they say you have to go. And I couldn't sell my home. It was 2007, and I couldn't sell it for what I owed. So I had to, negotiate that short sale so I could get out of it and move on with my life.
Okay, so you couldn't rent it out for what you like for your payment either, right? So it's not like
Right.
where you could say, okay, well, I can't sell it, so I'm going to move and put renters in. That wasn't how that works then.
Right.
So there are reasons why people have to move. Some people were losing their jobs. Some people needed to move and you can't pay both payments. There's lots of different reasons why somebody might need to do that. If you don't need to move, right, and you can make the payment, you can kind of weather the storm, right? And you say, okay, my house isn't worth it, but I'm not trying to sell it right now. But when you have to sell, and you can't get what you owe for it, then yeah, you go to the bank and you talk to them. So short sales are a little bit different than a foreclosure, right? You, it, Anyway, we're going to talk about short sales, foreclosures, bankruptcies, a lot of different things that happen when we have the market. And the market was kind of a perfect storm. So besides the fact that prices were coming down and there was too many houses on the market and some of those other things during that time, what else did we have on the lending side that was causing problems? So what kind of lending practices were we doing back then that would be a perfect storm for people not being able to afford their payments?
They were doing first and second mortgage, and they were doing interest only loans on I believe it was on I can't remember if it's the first or second, but
So
They
there
were
was,
mortgages
also
yeah,
on the
doing, they
home,
were also doing
interest
my
only.
favorite, stated. I like
stated
stated.
income. Okay, somebody could walk in and say I make $500,000 and get a loan. Okay. What else?
I mean, in reality, now it sounds absurd, but once everyone jumped on the bandwagon and could get away with it, everyone just ran with it.
Right. So if you state your income and it's not what your actual income was, you're going to have a hard time making your payment, right?
The labor market contracted too.
They tell me what you mean. Sorry.
Well, available incomes started to change.
Okay, right.
So as people had to make more payments or get real about their mortgages, the market wasn't moving in the direction they imagined it would be for higher incomes or sustained jobs. So you had a bunch of people that got a mortgage without being able to really verify that their employment was that strong.
Okay.
And
And so people
then,
were losing jobs too.
so it was a perfect storm in that a number of people, um, just had a reduced income or an income that couldn't satisfy their mortgage with the cost of the rest of their lives.
Sure.
And then
Sure.
the panic button was kind of hit, and many people, kind of the bandwagon there, chilling out what was just said that, oh, we have an option out of this. We made an error, we bought more than we could afford, and so now we have an option to kind of get out or try to get out.
Yeah, with the least amount of damage. Okay, so why am I talking so much about 2008, right? Are people scared now that this is going to happen again? Right? So people are kind of scared, they're thinking, okay, is this a lead up? Especially because we had that big dip and then we had a big increase during COVID, right? And we're about where we should be with the normal 5% increase in value. If you just take a trajectory and go straight, we're about where we should be. But we had a big dip and then a real quick rise to get back there, right? So I feel like we're about where we should be, but it was a little stressful how we got there. And so people are scared. Some people are like, what if I can't make my payment? What if I can't sell my house, right? What if I'm underwater? Those kind of things. So that's a real, thing that people are worried about right now in our market. Okay, we had stated income loans, 1 day out of bankruptcy loans, start a business and immediately get a loan. Builders had lots of homes, too many loans that that it shouldn't have been given out to a builder for all the lots that they had, and then the bottom fell out. You had to miss your payment so that bank would even talk to you. So a lot of people that were really struggling with their credit, um, and people just started getting on the bandwagon of, well, you don't have to pay for a year, and they can't, they're not really going to kick you out for a year. So anyway, just kind of think about, do you think this is a bubble now? Do you think that, yeah, see, I was updating this and now it's not updated. So let's talk about June 2024. Okay, about how many homes are listed on the MLS right now? I Googled it because I don't have an MLS access, but we'll see if I'm close.
Is that last year or this year?
This year, well, I probably don't have that, right? So let's say May. Sorry, because we don't have June's data yet.
Well, you had said 2024, that's last year.
Oh, look at me. See, I was all ready when my computer died. Go ahead. Okay, so May of 2025. Anybody know about how many? I Googled it, so I don't know if I'm correct, but it said just over 18,000 in Utah. Do you think that's right? Does that sound right? I don't know. I don't have an MLS listing, or I don't have an MLS access, but Google said about 18,000. But then I looked back in and I asked in Utah about what was the average in 2008 for listings, and AI said it couldn't give me that. But when I Googled for the whole country, it was 4 million listings. So there was tons more listings. I mean, I even multiplied 18,000 times 50, right? 50 states, and you come up with about 900,000. So 4 million versus, it's a lot more saturation than what we have now. And of course, then prices started to drop and lots of crazy stuff started happening. So are we still a little bit low in inventory in Utah for demand?
We are, yeah.
We are. Okay, so we don't have, we're low, and last time I checked, it was about 50,000 units low. So we're still low. We have people who are looking, waiting for what's going to pop on the market next, right? Um, so we are a little bit low. So that's helpful in, our forecast in the future. Now, I don't know other states, right? I focus mostly on Utah, but there's other reasons why probably we're not going to have a bubble and why experts think that our market is really stable. Okay, we talked about that. We've talked a little bit about this, right? Why are our buyers scared to buy? Rates, right? So rates just are what they are. Talk about that. We can refinance about every 3 years. It's cyclical in rates over over the years that rates come down and you can refinance. Think about, what do you tell your scared buyers? Do you know about the market? Do you know what to tell them? Okay, so the Frank-Dodd Act was established. As a lender, I have to prove that people can make their payments back. Now, I was talking to my kids the other day. Started talking a little bit about real estate. I'm trying to get them to start saving for homes themselves. One of my son's truck's paid off and he wants to get a new truck. I'm like, not until you buy a house. Do not buy a big truck until you buy a house, right? I see these young kids come in with $1,000 truck payments costing them $200,000 in buying power. So, get your house first. But basically, we have to prove that they can pay their back. So if somebody comes into me, this is one of the funniest things, and they're like, that doesn't even make sense. Somebody comes into me with $1 million in the bank, and somebody else comes in and they're making $20 an hour, two people making $20 an hour at Walmart. Who can I give a loan to? No money in the bank, zero down loan for these two people who each make $20 an hour. They have no debt, let's say, because I've done loans just like that, right? Forty
But they
dollars
have
an
an income
hour.
history.
Excuse me?
They have an income history.
They have an income history, yeah. And I've got this other person who's got $1 million in the bank and they want a loan. Who can I give a loan to?
I mean,
Person with a job.
yeah.
Right? And it seems so crazy, right? That somebody with $1 million in the bank, I mean, they could go pay cash for a house, right? But they can't get a loan. And somebody else who is making, together $40 an hour, they have no money in the bank. I can give them a loan. So we want to see future income, right? So child support, if it's not going to continue for 3 years, I can't use it. If, we're going to ask the employers, what's the outlook for this future income? Is it going to continue? Any kind of income, we're looking at how long it can continue. So what about two people who are really stretched in this market? Any concerns? Most people who are getting a loan right now are kind of stretched, right? So divorce is something that a lot of people are struggling with right now, because if you get a divorce right now, what's likely to happen? For the average person, average income.
The property will be sold and neither one of them will be able to qualify independently for a home that's of similar value.
Right. So that's hard, right? I mean, when I got divorced, I had a really little house and I still couldn't qualify on my own. I had to have my dad co-sign for me because I was a stay-at-home mom and I had a couple part-time jobs, right? So divorce is one of the things that's really hard right now in the market, because during COVID, if somebody was getting divorced, one or the other probably could qualify with those low interest rates and pay the other one out. And it just doesn't make sense to refinance, especially if you have those low rates and get the higher rate. They just can't qualify.
Isn't there
it actually
assumptions
still-
that can happen?
You can sometimes assume, but it takes a long time. So like for me, I only had 3 months. And an assumption takes longer than that. So it depends on how nice the other person is about allowing you to wait. So,
Why
but
does an
yeah,
assumption take so long?
I don't know. I just have noticed that sometimes the servicer won't allow it, and sometimes it just seems like they're just really slow. So I know of one person, and it was 6 months to a year before they had it finalized. So maybe it's just certain, how fast you get the stuff back to them, but it seems to take longer. And then at the end, they might still just say, no, we're not going to do it. And so, but I have seen people who are nice. You can stay in the house and, sell it and pay me back in 10 years or something like that, right? So there are some things that people can do. And if it's in the divorce decree, the other person can exclude that payment from their income so that they can go buy something else too. Okay, short sale wait times. This is good to know. And we're counting from when you go off of title. So it's not when you decide to or when you apply for it. You have to actually know when you went off title. 3 years for FHA. Conventional is a minimum of 4 years. NVA is 2 years. And we'll talk a little bit about some caveats with VA too. Okay, let's do our first word. This is a fast class. It's only an hour. Okay, let's do one short sale. Again, we're going to do 4 keywords, and you can email them, you can send them. Thomas, do you have the link to put in the chat? You can click on the link or you can scan the QR code, and I'll put that up at the end again. Okay, so our first word is short sale. Okay, foreclosures, what's the difference here? So we've got short sales, right? So your property is worth less than what you owe on it and you need to sell. What's the difference with the foreclosure? Be brave. Doesn't matter if you're wrong.
Basically just walking away from the home.
Okay. So a lot of times, Tammy, like they can't pay the payment anymore. They stop making the payment. It takes a while for somebody to come in and say, okay, now I've got to kick you out and evict you. Back then it was taking quite a while, right? We heard lots of stories about people living in their homes for a year or more for free. But the bank has to come and say, okay, you haven't been making your payments. I need to evict you, and they've got to go through all this process. Now, the bank has to recoup their losses, right? They've got to sell the property too. So in 2008, it was hard for the banks to sell the properties too, right? Right now, what's the average listing time right now? Last time somebody told me it was in the 50s days on market. Am I wrong?
No, that's about right. 30 to 60 days.
Okay, so depends on where you are, obviously.
54 days.
Okay. So we're 3 to 4 months. That's a lot less than time than it's going to take for somebody to foreclose, right? And so you should be able to sell your house, and the bank also would rather get better money for it than if they, leave. You never know how the conditions and things like that, right? So right now we're not seeing very many foreclosures. I did do a short sale last year, but I'm not seeing short sales either. So, what can somebody do to prevent having to go into foreclosure? Right now in our market, right? If you know you're going to be in trouble, you know you're not going to be able to make your payment, you should be able to list your house, talk to your agent, figure out what you're going to get from it, figure out if you can sell it. When does the wait period start and end again on foreclosures? When you go off a title. Okay, so when you go off title, that's when we're going to start our wait period. And foreclosures are longer than short sales. A foreclosure is going to be 7 years conventional. FHA foreclosures are 3 years, VA's 2 years. So conventional is longer, but the government loans are about the same as the short sale. Okay, so you
Question on
stop
the wait period.
Sorry, what?
So yeah, just can you clarify what that wait period is? What are we waiting for again? Can you explain that just a little
Yeah,
bit more?
so when you have a foreclosure, you have to wait until you can get another loan. So you have 7 years to wait before you can get another conventional loan, and you have 2 years for the FHA and VA. So you're just waiting. So you'll have people come to you and they have a bankruptcy, and just a bankruptcy without a foreclosure is a different wait time than a bankruptcy with a house on it. And so, we have those different wait periods, and we'll talk a little bit about that. What about when you transfer title, sometimes you'll get due on sale clause. So, you stop making your payments, taxes, HOA, people stop making those payments. Anyway, there's lots of reasons why somebody might be in foreclosure. Okay, wait times on foreclosure. We talked about this. 3 years minimum, from the time the person goes off title to when they can apply. So FHA is an interesting one because they can't even apply for the loan until that time period is passed. I can't get a case number or do anything until that time period has passed. So you want to be super careful there. You want to make sure that, nobody's pulling that case number a month before, and then you're trying to close on the house and you can't because that case number's wrong and was pulled too soon. Again, minimum 7 years. Fannie Mae's super hard 7-year rule. Sometimes Freddie Mac will run earlier, but I always say 7 years.
And do they stick to that?
Excuse me?
Is that hard and fast?
Fannie Mae is hard and fast. So sometimes Freddie Mac will let things run, and if it runs eligible. So you could try a little bit earlier and see, maybe they have really good credit, maybe they have a big down payment, and Freddie Mac will let it go through. But you'd have to try it and see. Whereas Fannie Mae, you don't even try. So if we're less than 7 years, but we have some compensating factors, we might try on Freddie. The other ones are hard rules, like FHA is 3 years, VA is 2 years. So VA insures their loans, right? So VA is one of the best loans for people if they qualify. They don't have mortgage insurance. They do have a funding fee, or a guarantee fee, we call it, if they're not disabled. And if a veteran has a foreclosure, they can get a VA loan again, but they're required to pay back the amount that the VA had to pay out or lost. It will show on their certificate of eligibility when we pull it. So, so just be aware of that. But usually if you're working with a lender on a VA, they should be pulling that COE first thing, getting the documents to get that, and they're pretty fast to pull. Usually they're one day. I've had a couple hiccups with VA loans where people could not get the right documentation, but for the most part, they send you their DD 214, it's called, if they're not currently military. That's kind of when they leave the military, they get what's called a DD 214. And then I can submit that and get their certificate of eligibility, and it will tell us if they have any disabilities, if they have any money that they're getting every month from the veterans, if they have to pay the upfront funding fee, and that's added to the loan amount, so they don't have to come in with that. Now let's talk real quick here. Who knows, is VA truly a zero down program? So be careful when you're talking to your veterans, because I have sometimes veterans come to me and they're like, it's zero down, not to pay anything. And I'm like, oh, well, you have closing costs. You don't have to put any money in your down payment, but you still have closing costs unless your sellers are paying for the closing costs. So just kind of remember that when you're talking to your veterans, so that their expectations aren't incorrect. Okay, let's talk about deed in lieu real quick. Deed in lieu, what is that? How does that different from a foreclosure? So instead of not making your payments and having the bank come to you, kick you out, foreclose on you, file documents, you say, I can't make my payments, here's my house back. And so again, when you go off title is when your waiting period starts for a new loan, but you're only 4-year wait instead of 7-year wait to get another loan. So that's something to remember if you ever find yourself in that position, right? If you go back to the bank and you say, and we do a deed in lieu, instead of a foreclosure and waiting for them to foreclose on you, you have a shorter wait period when you're ready to buy your next house. Now they do affect your credit. short sales, all those things, they affect your credit the same way a foreclosure does, but you have a lower waiting period. Okay, any questions on deed in lieu? So they're 4-year wait period instead of 7. Others are the same, right? So we still have our 3-year for FHA and 2 years for VA. So I did a loan last year for a guy who had said he'd had a deed in lieu. He had the paper signed that said deed in lieu that he gave me, and it turned out that they'd actually foreclosed on him and he didn't realize it. So it was back in the 2008, and I don't know how that happened because he had signed papers that said deed in lieu. But when we looked back and figured it out, so we had to real quick switch from conventional to FHA. So sometimes that is a real thing that happens in loans. I know in 2000 during COVID, some loan officers and agents were submitting offers as conventional when they knew they had to go FHA. Ethical or not ethical? It's an opinion. No right or wrong answer necessarily, but some people would feel very strongly that it was unethical. Other people didn't, right? So during that time, it was hard to get an FHA or a VA loan offer accepted. Why?
The requirements with the appraisal, I would think.
Okay, so during that time, how fast were prices going up? I mean, within a year, some properties were $100,000 more than they were the year before, right? So with FHA, not with VA, but with FHA, the appraisal sticks to the property for 6 months. So if another FHA borrower comes to buy the house, then that borrower has to use that appraisal, and that could be a big difference, right? So then that's a big risk for them in accepting an FHA offer and having it not go through, right? So it was hard to get under contract. So anyway, just kind of one of those things that's like, it does happen sometimes that you legitimately need to change your loan program. But a lot of people were having the sellers sign the FHA addendum at closing. So very interesting things that happened during COVID, right? All of us have our opinions about them. Okay, so we have what's called a drive report that we run during processing right before underwriting, and it's going to show properties that the client owns even in other states. So sometimes they just forget that they own property or they sold it, and so they don't tell us, and sometimes they'll still show up as this could possibly be this person's property. So even if they've had deed in lieus or foreclosures in other states, it's going to show up on my drive report. It's not sometimes people lie about it or try to like avoid finding out, but we'll find it on our drive report. Sometimes if people have the same name, they'll show up and we'll have to have a letter of explanation. So right now I have somebody who's a junior and they have the same name and they don't have middle names even. And so we've had to explain, okay, this is my dad's property, even though we have the same name. So you'll see some of those kinds of things on drive reports. You guys won't notice them, but we're working in the background figuring out if they do own properties in other states or those kinds of things. Okay, let's do our second word. Let's do drive report. Drive report. Again, I'm going to pull a drive report with their name, any properties associated with their name that they used to own, they did own, and they'll have to prove that they don't own it. It's just been that, even if they say, well, I sold that last month, okay, we'll send us the closing disclosure so that we can prove that you don't own it anymore. Okay, second word was drive report. Okay, bankruptcy. So there's 2 different kinds of bankruptcies, Chapter 7 and Chapter 13. Who knows what the difference is? So somebody could come to you and say, okay, I had a bankruptcy. Oh, okay, that's fine. What was it, Chapter 7, Chapter 13?
Isn't it
Yeah.
chapter 7 where they completely put everything in, and then chapter 13 is kind of like a reorganization of their debt?
Yeah, and my understanding is it depends too how much money you make and some of those things, you'll have a lawyer, but basically your ability to repay. So Chapter 7 wipes out all your debt. It's gone. Sometimes you can do a Chapter 7 and not include a house. So you'll see some people who have done a Chapter 7, but they don't have a foreclosure, or they didn't have a house that's not included, but sometimes you can leave your house out of it, or, you know, you can kind of figure out which ones you want to include. And then chapter 13, you'll have somebody who's over it, and you'll have a payment plan to repay. And so once you've paid 12 payments on that payment plan, you're actually eligible to buy a house with the chapter 13. But it's kind of a unicorn thing because most of the time their credit hasn't rebounded enough to buy a house at that point. And you have to, you know, include that payment, and you have to get permission from the trustee over that bankruptcy too. Okay, so chapter 7, total wipeout, chapter 13, reorganization payment plan with the trustee. Chapter 7 is 4-year wait period for conventional, 2 years for FHA and VA, and if there's no house involved. Okay, so again, if there's a house, then we've got a foreclosure, and then we have a longer wait period. Chapter 13, like I said, you could possibly qualify for a house within a year. If you've made 12 payments, your trustee says that's okay. Okay, so a distinction is made between chapter 13 bankruptcies that were discharged and those that were dismissed. The waiting period required for chapter 13 bankruptcy actions is measured as follows: 2 years from the discharge date or 4 years from the dismissal date. So, and I'm trying to remember what the difference is between discharge and dismissal. But I think discharge is when you finish paying, and dismiss. Does anybody know? I don't know why I can't remember that right now.
I think dismissed is because they didn't follow through with all of the conditions of the bankruptcy.
Okay, okay.
Dismisses those.
Okay, whereas discharge, yeah. Okay. So, a borrower who is unable to complete the chapter 13 plan received a dismissal and has to be held to the 4-year. Yep, you're right. And the shorter waiting period based on the discharge date recognize the borrowers have already met and established everything. Okay, great. For a borrower with more than one bankruptcy filing within the past 7 years, a 5-year waiting period is required, measured from the most recent dismissal or discharge date. A 3-year waiting period is permitted if extenuating circumstances can be documented. It's measured from the most recent bankruptcy discharge or dismissal date. Foreclosures, 7-year waiting period is required and measured from the completion date of the foreclosure action as reported on the credit report or other foreclosure documents provided by the borrower. Okay, so you guys aren't going to have to remember all of this, right? You're sending them to a lender to say, okay, figure out how much you qualify for. So most of the time, I'm going to be the one who is figuring out when they can buy and what their dates are and all those things. I can pull bankruptcy reports and I can figure that out. So don't stress about that. The idea just being that if somebody comes to you and says, I have a bankruptcy, okay, well, how long has it been? Let's see when your dismissal date is. Let's see when your discharge date is. That doesn't mean you can't buy a house. So here's some advice for bankruptcies. Reestablish credit as soon as possible. Basically, the reestablishing of credit is the thing we find holds people back from buying the most. Their credit just doesn't rebound. So they've had a total wipeout, let's say for bankruptcies, a chapter 7. They don't have any lines of credit anymore. They were all closed. Hits their credit super bad, right? But as they get further and further away from the bankruptcy, it's affecting their credit less. But if they don't start opening new lines of credit and building their credit immediately, then that can be hard. Can you just go in and get a credit card if you've had a bankruptcy? Is it hard? It can be. So we have what's called secured credit cards that you can go and get from a bank. You can put down $300, get a $300 credit card limit, and you can start using that and building credit, right? Your $300 is sitting there that can pay off that card, and you can usually get. So a couple of secured credit card lines can be really helpful immediately so that you can start building your credit. Keep your car loans and mortgages if you can, because those are gonna, anytime you close a good line of credit, it's gonna affect your credit even more. So if you can keep your car loans and your mortgages, right? Mortgages, especially because foreclosures and those kinds of things give you a longer wait period. Absolutely keep making your payments. If you lose all your cards, get a secured card. And the biggest issue we see in the wait time is they don't have good credit. So that's going to be the biggest hurdle that people are going to have after bankruptcies. Okay, so we talked about this. Chapter 7, just to recap, 2 years for FHA or 3 years if a home is included. Discharge date to application, can't pull the FHA case number even a day before. Conventional 4 years unless a home's involved, and then it's 7. Sometimes Freddie Mac will approve earlier than that, but Fannie's a hard 7-year rule. VA standard 2 years across the board, and USDA standard 3 years across the board. People are asking me right now about USDA a lot. Can people still do USDA loans? Is there a limit? Lots of different things, right? Because it's a zero down option that we want to offer our clients, especially in those rural areas. Now, some rural areas are gone, right? Saratoga Springs and Eagle Mountain, they're no longer rural. But we still have quite a few South Spanish Fork, north, east, Tooele, those kind of places, right? Sorry, west. So we do think about those, and I always look at USDA, but the problem with USDA right now is their debt to income ratios are lower than other loans. And so people will come in and want to do a USDA, but their income isn't sufficient to have their debt to income low enough to do USDA, if that makes sense. So our debt to incomes are higher right now, and it makes it harder to do a USDA loan. So just keep that in mind, but I always look at that. If we're in a rural area, I'm definitely going to look at whether or not they qualify for a USDA loan. Sometimes if their debt to incomes are lower, they make too much money for the program too, right? So there are income limits for that one too. Okay, judgments. Usually when I pull a credit report, judgments will show up at the bottom if there are any. And when someone's sued in court and lost but hasn't yet paid, that's a judgment that's made against them. People will file liens on their houses sometimes if they haven't made them. Sometimes we'll find liens at the very end, tax liens on properties. So be super careful with that. You want to make sure you're working with a title company that finds those up front and early, because that's one of the worst things, is to find out you have a lien on a house that you're trying to buy or that you're trying to sell at the very last minute. So what judgments have to be satisfied before purchasing a home? So for sure taxes, right? And most judgments have to be satisfied before you can purchase a home. Sometimes collections don't have to be paid off. It just depends on it when I run my underwriting system. So if I see a judgment, I'm going to be talking to them. Can we pay this off at closing? And sometimes I've seen where like it was an ex's credit card and they don't want to pay it. And I understand that, but we're going to be talking about what needs to be paid off and work that through before I even send out a pre-approval letter, so that you're never under contract going, oh, can we make this happen or not? We're going to be working on that before. Watch judgments if you're deeding someone onto your property. So be really careful. We had a lady who owned a house and she got married. It was the second or third marriage, and she wanted to be a good wife, and she added her ex onto her house. And she had quite a bit of equity, and he owed his ex-wife tens of thousands of dollars, and now her property has to pay that. So be really careful when you're adding somebody onto title. If they have liens or judgments against them, for sure don't add them onto your property, because then those liens and judgments are going to be subject to your equity.
Do all judgments and liens show up on your credit report? Is that how you figure it out? Do all of them show up on there?
No, they don't. So sometimes you'll find them through title when they run the title search. So title, like sometimes liens are just filed with the county and they don't show up on a credit report. So tax liens, you can add them to your debt to income if you've made a payment history. And so if you have a tax lien or a tax debt to the IRS, that doesn't necessarily mean that you can't buy a house. You just want to make sure that you're making your payments. Yeah. And that we have to count that towards your debt to income. Okay, collections. There's some really cool things that have changed with collections over the last year or so. So if you have medical collections, they shouldn't be showing up on your credit and hurting your credit anymore. And sometimes they do. And if you see one, if you pay it, then it should be removed. So I had a lady who was almost ready to buy her house, and when we ran our LLR, I think it's LRR. Anyway, when we ran that, at the very end, you run a soft pull on credit to see if any credit card balances have gone up, payments have gone up. So that's why we tell people don't put more on your credit cards, don't buy new things because we're going to run the credit again and see if they've added anything to their credit. And a $60 medical collection showed up. It dropped her credit score significantly, and she was going to have to bring $4,000 extra to close. And so we immediately went in. She paid the collection, and then we were able to get it removed. And she was able to close with her original credit score. So that doesn't happen with normal collections, but with medical collections, we can get them removed now if you pay them. Okay, so medical collections are a little bit different. And medical collections usually aren't too big of a deal, right? We have to, sometimes I just don't see medical collections like I used to. They just aren't showing up on credit. That's kind of the rule. So very rarely do we see those. Other kinds of collections, you have to either pay them off at closing before we can do the loan, or if they're 2,000 or less, sometimes we can just count a 5% payment and they don't have to be paid. So I'm going to be looking at those on the credit report and figuring out, do we need to pay these off? I had one where they had two big collections that had to be paid, and we went with the credit repair company and they negotiated down. So one was $19,000. They negotiated it for $1,900, and one was $45,000 and they negotiated down to 20. And then we were able to pay those at closing, the lower amount, and not have to pay the full amount. So you definitely can negotiate with collections, and especially if they have cash to pay it, right? If you don't have the cash to pay it, there's not much you can do. They sit there. But if you have the cash to pay it, then you can negotiate lower and hopefully get those paid off. So they didn't necessarily have to pay them. Just one more quick thing. They could have had a 5% payment, but they didn't qualify for their house with a 5% payment on $45,000. So that's why we needed to pay those off that time. So we have to look at our automated underwriting system. You guys aren't going to know stuff like that, but the lender will when they run their automated underwriting system. And that's why, I don't know if you guys have noticed when you're a seller's agent, if you get a pre-approval letter, does it say, I ran my digital underwriting system and got an approved eligible? That's a really good thing to know, and something you can ask your lender when you receive offers as a seller's agent. Did you run your DU? Did you run your LP? Do you use Fannie? Did you run your digital underwriting system that covers all of them? And did you get an approved eligible? So for me, if I get an approved eligible on a file, and I'm always going to run that before I send a pre-approval letter, then I have to prove what's in the file, and I can sell direct to Freddie and Fannie. Now, not everybody, brokers, they don't sell direct. They have overlays from other companies, but we sell direct to Freddie and Fannie, and so I don't have any overlays from anybody else. If I can prove what's in the file, the income that's in the file, which I should have income documentation to prove that already before I send a pre-approval. If they have their cash to close and I have their credit report, we've got a file that's going to go through. Let's see. ORS, Office of Recovery Service, what that? Does anybody know?
Trial support or family.
Yep. That has to be paid before you can close if that shows up on credit. So I don't see it a lot of time. I mean, I haven't seen it recently. There are other states that have done loans for people who are coming from other states, and if they owe child support at all, it shows up on their credit report. But if they've been paying it, then they're okay, right? It's when you're in revert, like when you haven't been paying or you have collections because you weren't paying it and you're paying it back. Those have to be caught up before you can do a loan. So if you don't have credit, there are ways to get it, right? So if you send somebody to me and I'm figuring out how much they can buy for, I'm going to be talking to them about credit. I don't always run credit right at the beginning, right? Some people aren't quite ready to have their credit run. Usually 3 months before you're ready to buy or 6 months before you're ready to buy. If they're worried about something though, I might run their credit, or if they know their credit's low, I might run it and see. And there's some things that I know, and I'm sure you guys have heard it before, that you can do to help somebody get their credit up that are, if they have money, are easy. So any maxed out credit cards are going to cost them between 20 and 50 points per card. So even a $300 limit card, if it's maxed out, it's going to cost them those points, right? So those are easier things to see. If they have late payments, you can try to get those removed, but not very many companies are going to remove late payments. And those are only going on their credit when they're 30 days late, right? So if they're less than 30 days late, they're not going on there. And then multiple lates in a row every month, those are going to really be hitting their credit. So there are some things that, you can look at. I can look at the credit report and say, okay, you just need to pay down your credit card balances. That's the only thing that's holding up your credit. And I can talk to them about that too. Okay, so right now, if I get a credit report, or if I get a credit report and there's a mortgage on there, or there's a credit card on there, but I have a divorce decree that says that they no longer have to pay those, we can exclude those with just the divorce decree. So that's a really good thing that's changed over the last few years. So when somebody's going through a divorce, they can't get a loan. So remember that. If they're in the middle of a divorce, they can't get a loan. They'd have to be done with the divorce and have the docs signed by the judge. You can get one when you have temporary docs signed. So sometimes when a divorce is going to take a long time, they'll have temporary, what's it called? I can't think of what it's called right now, but it'll be a temporary decree. It's not a divorce decree because it's not finished, but something temporary that puts the child support into place so that either party's getting the money they need right now while they're trying to discuss everything else. And if that's stamped by a judge, we can use that and go ahead and do a loan. To use child support as income, because if you are getting child support or alimony, you can use it as income, but you have to have been receiving it for 6 months. And it has to be the same amount every month. It can't be here and there and stuff. So if you have somebody who's going to be counting on that income, we need to make sure that they get it consistently every month and it's the same amount so that we can count it because they're going to look at that. And it also, I think, like I said at the beginning, it has to continue for 3 years. So if you have a 17-year-old and you're getting child support for them, we're not going to be able to use that, right? Because it's not going to continue for 3 years. Okay. Let's see. Late payments on credit. Someone is considered late only after they've gone 30 days late. I said that. Someone who consistently pays 1 to 29 days late would not be considered late for a mortgage lender perspective. It wouldn't show up on credit. One thing about mortgages that I tell people when they're, especially first-time homebuyers, when they're first getting their houses, be super careful not to have mortgage lates unless you absolutely, like any other lates are much better. Like if you have to pick, because if you have a mortgage late, you can't buy another house for a whole year. So I've seen people come to me who didn't make their mortgage payment because their house was selling and it kept getting extended. And so they just waited knowing it was going to get paid off. They had to wait a year before they could buy another house. So, so be careful with mortgage lates versus regular lates. Okay, we talked about that. Let's see. Okay, let's just go over this. We're done with our class now. Let me give you our last 2 words. Let's do bankruptcy for our 3rd word. 1 hour goes fast. Bankruptcy, and let's do Eden. I usually do that for my last word. Okay, you can spell it with a Y or you can spell it with an E and it still counts, but mine's spelled with a Y. Okay, I appreciate you guys coming. We have lots of people who, I always like to tell people, usually when somebody has a problem, any of these problems, it's not because they want to have bad credits, because something major in their life has happened to create this issue. And so we just want to know how to help them get in a house just like anybody else. And so it's good to know these things. Okay, so click on the link in the chat. Oh, sorry, last word again, Eden, my name. Click on the word. You need to give me 3 out of the 4. So if you missed one, it's okay. Click on the link in the chat or scan this QR code and send me your words or email it. You can always email it too. Just send your, my brain's, it's Friday, you guys. Send your numbers. Like your real estate numbers, your license number. There we go. The words are coming slow. Okay. Hope you guys have some fun plans for the weekend. Maybe you're showing some houses. Call me if you need any help, or James if you work with James, and we'll get your buyers pre-approved quickly and efficiently, and hopefully we'll keep getting people in houses. I'll stay on for a few minutes to let everybody make sure that they get all their words submitted. You're welcome, Tammy. Glad you could come. Have a good weekend.
Can you give last word?
You missed the last word?
Yes.
It's just my name, Eden.
Oh, okay. Thank you.
Hey, enjoy your weekend. Hopefully everybody got that. Is everybody okay? Got it all submitted? Okay, have a good weekend.